Hi, I am Warren Burnett and I'm a mortgage specialist. If you're looking at financing a home in the Greater Toronto Area, keep watching. We are going to walk you through the entire process of what international investors go through to secure a non-resident mortgage. Typically, a non-resident international investor interested in buying investment properties in Canada requires a minimum of 35% down payment of the overall purchase price. For example, let us say you're purchasing a property for $1 million. You would be required to put down $350,000 towards your down payment as a non-resident international investor. As a non-resident international investor, you may also be required to have anywhere between 12 to 36 months of the mortgage principal, interest, and property taxes on deposit, along with your down payment prior to starting an application. To facilitate a mortgage application, here are some of the documents that will help process your file. The first category is employment. Employment verification would typically require an employment letter or contract dated within the past 90 days, recent pay slip if you're salaried, and if you're self-employed, 2 or more years of business financial statements and or the most recent income tax assessment as provided by your country of residence. In the event there are no tax filing requirements in your country of residence, then an employment or business license or any sort of contracts that you may have in relation to the operation of your business will also satisfy the employment portion. Second thing we look at are your assets. We would request all assets or investment statements. If you have any sort of assets outside of the 35% down payment, you are putting towards a purchase. Assets include anything from personal cash, investments, or real estate you may own. These are good things to share with the bank because it strengthens your application as it shows you have additional fallback cash. The third thing we look at is your down payment confirmation. Typically, banks require a 90-day history of your source of funds. Eligible sources of funds would include cash savings, investments, equity in an existing property being sold. Now, if funds are coming from the sale of your property, you will need to provide a firm sale agreement plus bank statements that show funds have been on deposit or deposited into your bank account from the sale, whether the funds are in Canada or overseas. Finally, we look at your credit history. If you do not have any sort of Canadian credit history, a bank reference letter from the financial institution you bank with overseas, dated within the past 90 days will suffice. This will take care of your credit. Clients usually engage our services either early on in the process in order to determine how much they qualify to secure our pre-approval, which in most instances provides you the confidence to place an offer without any conditions, which is extremely important in a competitive market. Or they just put an offer on a property and want to ensure they qualify in the next several days before waiving their financing condition in their offer. Pre-approvals are good for 90 days. In the event you do not find a property within the 90-day period, we can renew it for an additional 90 days. Good thing with pre-approvals is we can also secure the best rates and lock it in to protect you. In the event market rates were to go up, you are guaranteed the original rate we agreed to. If the rates are to go down, on the other hand, the bank will honor you with the lower rate. So either way, you're protected. The best type of mortgage depends on your personal financial investment horizons and intended use. For instance, if you are purchasing a property to hold for the long term versus a property to renovate and sell over the short term, or if you have multiple investment properties, we look at the portfolio and try to determine the best approach to meet your needs. If you let us know your specific needs, we can recommend suitable options for you to choose from. The added value a mortgage specialist brings to the table are many, but I will focus only on a couple in my response. In general, a mortgage intake forms and applications tend to be static in nature. What I mean by that is that you have a list of qualifying intake questions that determine eligibility. If someone doesn't fit the mold perfectly, issues start to emerge. Here is where I add value as a mortgage specialist. Knowing and understanding that not everyone has the same needs and situations vary, I work with the buyers directly to have all the necessary documentation while ensuring that all the back office needs are met. Also, another great benefit is educating clients on the different mortgage options available to determine suitability. We get asked this question a lot. If a client has to be physically present in Canada to secure a loan, it is always a benefit and we would love to meet you in person. However, you don't need to be physically present in Canada to secure a loan. Your rate as a non-resident without Canadian credit history would not be any different from an individual with a Canadian credit history. We have a wide range of products and you can choose a single product or a combination of products to suit your specific needs. Some of the options include fixed mortgage terms versus variable mortgage term, open mortgage versus closed mortgage, amortizations up to 30 years, accelerated payment frequencies to pay down your mortgage faster, annual lump sum payments that goes directly to your principal. This is just to list a few. With that high-level overview of how to get a non-resident mortgage, I want to thank you for watching. Hope you found this video helpful and best of luck investing.